Welcome to Tax Defense Connect by DPZ with your host, Delphine Parigi. In each episode, we will discuss keeping and defending your empire against tax fraud accusations. Please note that the contents, opinions, discussions, and any other related information from this podcast is not intended to be tax or legal advice. Individuals and representatives of entities should consult with a tax professional based on the specific facts and circumstances of the taxpayer to determine how federal, state, and foreign tax laws as applicable may apply to their specific situation. You can find the show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, and Spotify. Now here's the host of Tax Defense Connect by DPZ, Delphine Parigi.
Hello everyone, I'm so happy to launch this fifth episode of the podcast Tax Defense Connect, which is an international podcast for all professionals and clients involved in tax defense worldwide. Today, I'm very honored and particularly ému, as I would say in French, as my guest is very special to me because he's the host of the Essential Tax Podcast, worldwide cross-border tax podcast. He's from the US. He's a leading tax expert. I'm very pleased to welcome Mishkin Santa. Mishkin.
Hello, Delphine. I'm so happy to be here. Thank you for having me.
It's an honor. Very happy. I think it's good that before we jump into a very specific topic, really, I think what we can maybe promise to our listeners are to dig into more understanding about the IRS and the consequences of investigations. For us, it's a very deep and unknown part. But before we jump into this very huge topic for 30 minutes, I think it will be very interesting to introduce to you, to share what's on your hot topics right now in the US as a tax advisor.
Okay, sure. No, absolutely. Hey, everybody. I'm Mishkin Santa. A little bit of background about me before I get into what's happening in the U.S. here in 2026. I'm an attorney by trade. So I've got, if you see my laundry list of credentials for those that are looking at the visual here. So I'm an attorney by trade, but I'm also an accountant. I'm one of the owners of the Wolf Group, so I can't practice law, so I can only do accounting. Don't come see me if you need a legal opinion. If you need a U.S. legal opinion, I'm happy to refer you to a U.S. attorney to give you that. The Wolf Group is a certified public accounting firm located in Fairfax, Virginia. We've been doing cross-border international tax for over 40 years. And so being right there next to Washington, D.C., we've had the luxury or the privilege of watching tax law as it comes into being right there at the source of where everything is happening at. I was formerly with IRS Office of Chief Counsel way long ago, so 2008 through 2012. I'm going to date myself a little bit here as far as how long I've been practicing. And one of the first things I'll lead off with was that when I was with the IRS, our staffing level back then was about 81,000 employees. And if we look here today, here in 2026, given all the shenanigans that have happened since January 20th, 2025, the IRS workforce, which was over 100,000 at that point in January 20th, 2025, which is the inauguration of President Trump, we're now that their workforce is now less than when I was there. So their workforce is hovering around 76,000 employees. And every day employees are retiring or moving on. People are getting fed up with working with the federal government. And the main problem we have there is that there's a lot of institutional knowledge that's just walking out of the door there. A lot of people think that the IRS has every single area of law covered, and how could they not? And they should have an expert on everything. But I can tell you that they have big gaps in certain areas. Foreign pensions would be one area that they probably don't have a very good stable of background in. There's a concept we have in the US called PFICs, passive foreign investment companies, which is quite common in the French assurance vie. Hopefully I said that correctly. My French is not that great, but that's another area that they probably don't have good bench strength. International organization employees, non-resident alien taxation. So I could go on and on, but the point is that they're hurting. And in the flip to that, what they've done is they've created their own internal artificial intelligence usage. They don't connect to the general internet because they can't do that because of all the taxpayer information internally, but they have their internal AI, which is interesting because they can do audit exams. So in the US, we don't really, Everyone calls it audit, but in the US we call it examination, like you're taking a test, but really you're just getting audited by the IRS. But the AI is actually a lot more astute and efficient at doing audit and examination, what we call correspondence or computer audits. And so it's an interesting how they're relying more on technology in lieu of people. And we're not certain where that's going to take us with the IRS and to what level we're going to see that at. But the AI that they're using and their ability to monitor and detect issues, in my opinion, is a lot stronger than when they had the 100,000 employees. So it's this really weird thing where the customer service is down, the internal background knowledge is down, but their ability to audit, exam, utilize their internal resources to create efficiencies is way up.
It's very interesting. I think this move about reducing the staff in the tax authorities is a very paradoxical approach by different states, because indeed they reduce the staff, but at the same time they increase the expectation of reassessments and of recovery. So they make this huge hope on the IRS. But do you assist on the fact that this automatization of the audit, of the examination, correlatively correspond to a reduction, I would say, automatic penalties like we have on the highway? You get more and more automatic penalties. So at the same time, you have AI and automatic, or it's still a human as a way of checking and implement tax reassessments?
So that's a great question. So we started getting into Internal Revenue Code 6751 with that. And theoretically, the one thing that you want to understand on that is that there should be a human being that should be signing off on these automatic penalties. There should be a manager that is approving everything. There should be a lot more human interaction, but there's really not. And under Internal Revenue Code 6751, generally for these big international penalties, which normally start at 10,000 US dollars, the way the law is written, or the way the law that is interpreted by most practitioners, is that you got to have a human supervisor to sign off and everything. But that generally is not the case. We're seeing a lot of those penalties come through that are automatically issued by the computer, which I guess you could dovetail back to the AI. The AI is spotting the issues. The AI is helping to lead people down the road to getting penalized, but it's not putting together, in my opinion, it's not putting together a deep analysis and coming out with a lot of the background information that I think has walked out the door. So I don't see the AI doing a full PFIC analysis or CFC analysis or foreign trust analysis or anything like that. It's just going to raise, I think it's going to raise issues. It's going to detect errors, and it's going to say, this looks to be incomplete. And that by itself could trigger a penalty. Here's your $10,000 penalty. Now, you taxpayer, you come back to us and you tell us why we're wrong. And I can tell most taxpayers that you almost have to educate the IRS on the issue that they may raise, where you have to say, look, this is what you raised. This is why I did what I did or didn't do what I didn't do. This is the solution to it. You're almost writing the memo for them, if you will. And if you can do that, I think you can go a long way with putting together a really rock solid audit defense. It's when you come in and you don't really have the ability to explain it and you're relying on them to really understand it that you can have some problems.
Because I thought it was impossible almost to have a human being to speak. Each time I have clients having cross-border issue with the US, there was this fear about the IRS and saying it's impossible to have a human being speaking to us. Is it right, or it depends on cases, and maybe then I was not involved to go deeper, but because in France it's automatized, but we still have access to quite pre-proceedings where we can speak to them.
Yeah, you're right. It's very difficult to get a human being for the most part on a lot of these types of issues, especially when you're responding to notices or the initial kind of parlay by the IRS. What you want to try to do is you want to try to get the issue in front of an appeals officer. Generally, that person you're going to be able to talk to that person over the phone. And in fact, if you have access to what's called the IRS online account, which I would tell any client or taxpayer listening to this that's dealing with the US, go create an IRS online account. But you can email documents to them through your IRS online account. They can come back to you. So correspondence that can happen there. But one of the techniques that I use is if the IRS offers a tax court case, I always opt for that because then they have to talk to me. The attorney for the IRS doesn't want to go to court. They absolutely don't, because if they go to court, the tax court judge is going to say, the moment they step into court, and I've done this before, the tax court judge will say, what are you doing? Go back outside with the taxpayer, settle the case, and come back in. The U.S. tax court prides themselves on settling 99% of all cases. They don't want to try cases. So when you
Very interesting, because in France we have lots of litigation, of tax litigation, because we have a specific court called administrative court, which deals with state affairs and notably tax.
Yeah, absolutely. So what happens with the tax court cases is normally the attorney will say, let me get an appeals officer involved. You guys go settle. And if you can't, then come get me and I'll settle. And so I've done it both ways, where I've settled with the appeals officer or I've settled with the attorney. That normally solves the issue. That normally you can get a fair handshake on a lot of things.
Okay. I have a very maybe naive question, and I'm very surprised I have no clue about the answer. Do you have specific tax authorities for state tax, or is it also the IRS which covers the state tax in the US? Sorry, I'm 20 years of experience working in the US, and I don't know this answer at all.
No, that's really an astute question, and I wouldn't expect most people to understand that. But all the states have their own. So in each of the 50 states, if the state has an income tax, it will also have its own corresponding state tax jurisdiction. And funny enough, someone asked me this question the other day. They said, which you always talk about the New York state tax, and they're so tough, or California state tax revenue, they're so tough, the franchise tax board in California. Which one do you fear the most? And I always tell people, I say, here's my top 5 jurisdictions that I fear the most. Number 1, Germany. I think the Germans are the worst. If you ever get into a problem with German tax, I feel like because they want every single penny ticked and tied. Okay. Yes. Number 2, New York.
The penalties are very low in Germany.
Yeah. Yes.
Transfer pricing, you get only have to pay the transfer pricing, but no penalties. In France, it's 80% and criminal prosecution.
But maybe I fear France more than.
Sorry to disagree. I think we could have a long debate on Germany and France. Sorry, I let you go. Sorry.
We had to do one client. We had like a 10-year thing we had to do with Germany. I'm like, this is insane.
So first is German for you. Okay.
Yeah. Germany number 1. New York is number 2. I think New York is so. Okay. The New York tax folks. They will fight with you. They will tangle with you, and they have a lot of good case law that is on their side. So I always tell people, I go, before we go challenge New York, let's go look up the cases, which is easy to do, and let's see what the cases say on this, because they do a lot of rulings. And I constantly, every time the New York cases come out, I download them and I put them to a little file. And I'm like, okay, this issue pops up. Now I've got the cases. I can easily look at it. California would be number 3, because California, not only are they tough, but they have, quote unquote, decoupled from a lot of federal law. So when the federal law comes out, the states can either adhere to it and they can say, okay, the one big beautiful bill, we're going to follow that. Or they can say, no, we don't like that. We're not going to follow that. We're going to do our own thing. California loves to do their own thing. They have their own set of rules that don't really follow the federal rules. So not only is that different, but they have this 30-year statute of limitations. They're really tough on people that used to be in California that didn't properly leave California. So they're tough. And then New York IRS would be number 4 on that list for me.
Okay. Only in the 5th one. Sorry, I missed one.
Number 5, I think, would be a toss-up between DC, Virginia, and Maryland. They're just really tough. Some of the states are really tough. Some states are super easy to do, like Massachusetts, easy. Louisiana, I think, is fairly easy. Texas, Florida, Nevada, they don't have income tax, so we don't have to worry about those at all. Tennessee, same thing, no income tax to worry about there. It really just depends on which jurisdiction you had to interact with and how nitpicky they can be. Some of them are super easy, some of them are not.
So it's very important, yes, indeed, that you can combine at the level of international groups 6 or 7 jurisdictions just by reaching the US lands. And I think it's perfect to switch to the topic about how we can avoid this. We have currently several requests from cross-border issues of clients having or prospect having issues with the reporting, and notably with the US having wrongly declared in too much in France, not enough in the US. I heard about proceedings like a streamlined domestic offshore procedure.
You said so well. That's perfect. That's right on point. Yeah.
So are there several proceedings? It depends on the topic. Of course, we will reach you. That's for sure. But just to have, if you can give us some introduction in this forest.
Yeah, no, absolutely. Absolutely. And actually, I started my career in this area, so I've been doing it for a really long time. It's generally under what we call VDP. That's everything in the US with the IRS is an acronym. So VDP stands for Voluntary Disclosure Practice. And so when I was starting out my career, if you had a problem where a client didn't disclose income or an informational return is something related to a controlled foreign corporation or a foreign trust or a PFIC, which I mentioned earlier, or a foreign bank account. What you used to have to do was call the Department of Justice, the special agent in charge that coordinated with the IRS, and you would say, I have a client, I'm not going to tell you their name or any of their specific details, but this is generally the fact pattern. And what's the deal for if I bring this client back in compliance? What do I need to do? What would the client need to pay? And then they'd give you, quote, the deal of the day. What happens is in 2008, you had Bradley Birkenfeld that got arrested in Florida, the UBS financier, for promoting a scheme of hiding money and hiding income for US people in Swiss banks. That really cracked open the lens for the IRS on, okay, we have a lot of people that are not reporting properly. And so offshore voluntary disclosure became a thing from 2009 to about 2014. That was the big flavor, and that was brutal. That was meant for true life criminals. They'd make you do 8 years of tax returns, 8 years of reports of foreign bank accounts, pay a penalty of 27.5 up to 50% of your assets. It was bad. One day I'll write a book on it. I think the IRS will get a black eye on it. It was just not a great time for a lot of people. Around 2012, though, the IRS got a lot of complaints from practitioners like myself that the offshore voluntary disclosure program, which was really meant for people committing criminal acts, was being used by a lot of non-criminals, or had to be used by a lot of non-criminals, right? This is the only way to come back in compliance. So you had very benign cases, we call them non-willful cases, of just normal people that didn't know, that didn't understand, which we still see today. We still see a lot of that today. And so the IRS decided then in 2014, we're going to create a sub-program or a sub-amnesty program called streamlined filing. And we're going to give two options. One is for people living in the US, that's the domestic one that you mentioned. And then there's a foreign one for people living outside the US. And they said at the time that those programs would only be around for a year or two. Everyone should come into it. And I think they had a crazy number of taxpayers that did it. I think it was like 120,000 taxpayers took advantage. Yet here we are today, 2026, and those programs are still around. And in fact, now the IRS has a line item in their budget for streamlined filing submissions that they actually count on a set amount of revenue every single year from people that have those issues. Those amnesty programs are here to stay. I don't think they're going to go anywhere. And in fact, there was just a 400-page work paper put out by the IRS where they're talking about doing a new program, a third program, in addition to streamlined filing, for people that aren't able to use the streamlined programs. And then there's a proposal that just came out from the House of Representatives for an amnesty program for people with digital assets or cryptocurrency that have not been putting those things out. So the area of voluntary disclosure practice, I think, is about to be updated significantly in this year, maybe next year.
Thank you for reaching to the cryptocurrencies and so on. What are there 2 or 3 topics where right now there is really a huge focus in the US? I guess crypto is huge for many aspects because indeed it's quite a new topic, even if it's already 10 years almost. What are the criteria to transform a standard case into a fraud? And what are the main topics right now, if you have 3 topics you have in mind about a really high focus in the US right now by the IRS or the state authorities?
Yeah, look, we see a lot of people, we see normal just crypto investors, right? So you can open up a brokerage account, you can buy crypto. I know that a lot of people were salivating when Bitcoin hit, I think it was 120 last year, 120,000, and then it just plummeted. It's down, I think it's like at 80 right now, 80,000 or 90,000, so somewhere in that neighborhood. So you have that, right? You have people that are just normal digital asset investors. They're going to get what we call a 1099 DA. That's the information form from their crypto broker. That's easy. That's an issue though, because the IRS does not have good data on people's crypto. And so this is the first time we're seeing these information reports being put out. And so the IRS is basically telling taxpayers, you on these forms, you get to set your basis, your starting point. We don't know it. You get to set it. So it's like the once in a lifetime kind of deal. Like you tell the IRS what the basis is. Be careful, pigs get fat, get slaughtered, but you're telling them the starting point. Once that's locked in, they've got that info. And then from here on out, that's how things will get reported. But from what you're talking about, the nefarious things, there's all sorts of people that are not using crypto brokers. They're doing off-chain crypto. They are moving funds through crypto that should not be moved that way, whether it's in businesses or for certain other types of activities. And then they're not declaring the income when they're converting the crypto to some other form of asset or cash or whatever it is. So we have a lot of things that are not in the normal detection processes that are occurring outside of the crypto sphere that are trying to be wrangled. The House and the Senate are really working hard to put together a digital asset crypto tax bill. This is like their white whale. They're like, in the US right now, everything is so political. We have so many politicians that are retiring or leaving because they're shenanigans. So the margins change every day between who has power and who doesn't. But the one thing that both Republicans and Democrats agree upon is there needs to be a crypto tax bill put in place because we don't have really good, we have really bad crypto legislation. It's either not there at all or it's just really bad. And so they're really trying to put crypto legislation around rewards, around staking, mining, and then the usage of crypto with loans. That's a huge, there's so much fraud with crypto loans, what we call wrapped crypto. So I think they wrap the coin or something, and then they give you a loan off of the value of that. And you can't unwrap it until you pay back your loan, but some people never pay back the loan. So it's actually income. So there's a whole lot of shenanigans that are floating around in that area. And I think, again, as time moves on and the IRS and the Department of Justice get more sophisticated in their crypto detection, which they are, people that are doing those activities that think, there's no way to get caught, they'll get caught. And they'll make a couple big splashes. They'll prosecute some folks. They'll let everybody know they're doing it. And then that will change everything on its head. And then I think if they're offering a crypto amnesty program, I think a lot of people will end up using it at that point in time.
So I understand there will be the midterms and autumn 26. Yes. Does it mean that many projects are right now blocked because maybe there are also other topics? But what if you have a big crystal ball? What will be the next big reform from your country beginning of 27?
Here's the
question,
Yeah, no, it's a loaded question, and I'm talking
because I have similar question from clients and say, "Oh, will we have a real estate tax, a wealth tax still in France, and so on?" And then I say, maybe not, but what we can do is we need to check that everything is already clear and crystal clear, because if it happens, you're ready. So that's my answer, but I don't know if you're on the same path.
Yeah, no, we're on the same page. So without trying to get political on any of this at all, from my perception of what's going to happen, I think that the Democrat, it always happens every single time when you have a president that just got elected and then the president has the House and the Senate, they will always lose ground. That's historically how that happens. So I think you'll see Democrats take seats in the House and the Senate. And what that does is that limits the ability to pass law unless they decide they want to actually cooperate with each other. Novel concept, right? And so if they do decide that they want to cooperate with each other, I think there's a bunch of hot button topics that I know that folks in Congress want to pass. There have been a lot of rumors percolating that they want to spur the housing market in the US. So there's been several proposals to eliminate the US capital gains tax on the sale of your primary residence. There's one to eliminate the capital gains tax if you have a rental property and you sell it to your tenant. There's a bill to index capital gains for inflation for investments. I know that one is a really big one that a lot of people want to see happen. There's a first-time homebuyer tax credit, which we used to have under the Obama administration. They're talking about maybe bringing that back as well. So they want both sides of the coin. They want to be able to give a carrot to the sellers and then a carrot to the buyers, because they can't lower interest rates. That's hard to do.
So how much is the interest now for a 20 years loan approximately?
Yeah, it can range. If you have really good credit, you may be able to get a 5 to 5.5%, but most people are probably going to end up around 6, 7, 8%. And the problem is that during COVID, a lot of people ended up at 2%. So you have a lot of people that have these homes that have inflated in value significantly. So maybe they bought the home for $500,000 at 2%. The home is now worth maybe 1.5, 2 million. Really, it's gone up substantially. But the folks are not wanting to sell because they're like, why would I sell? I've got a 2% mortgage. I'll never be able to get that rate again. And if I sell my house for 2 million, that means I got to go out and buy another house for $2 million. at an interest rate of 5, 6, 7, 8%. But when they start to look at the math, it just doesn't, the math doesn't math, as we say here in the US. Yeah, there's been a lot of talk about that. One very interesting bill, which has gained a lot of traction, I don't think it's going to get passed though anytime soon, but there's a bill that is called a non-resident U.S. citizen election, and it only applies to U.S. citizens and only U.S. citizens living abroad. So if you live in a foreign country and you're a U.S. citizen, you would be able to make an election to be treated as a non-resident of the U.S., meaning you're not subject to worldwide taxation, you're not subject to worldwide information reporting. You would have to pay something similar to an exit tax, but only if the value of your estate exceeded the unified credit, which is currently $15 million. So for most of the folks living offshore, they'd probably be able to make that election without any issue at all. And then they'd only be subject to tax on U.S. source income, if any, and filing as non-resident. I know that has been a long wish list for Americans abroad. It's been pushed heavily by a lot of people. In fact, they have already done a template certificate that the Treasury would give you that says, we declare you to be a non-resident U.S. citizen. So you can give it to a foreign bank and say, hey, look, don't close my foreign bank account. I'm not subject to FATCA. You don't need to do a lot of reporting for me or withholding. Whether that actually gains traction, given everything else that's going on with digital assets, the housing market, what have you, we'll see. But I know that was a big one that was also floating around.
Thank you. I think we are approaching the end of the podcast. I would like to suggest, if you would like to check my understanding, if I have well learned maybe the 3-4 takeaways.
Sure.
I feel like there is the staff from the IRS has been reduced and replaced a lot by artificial intelligence, and that the second point is it seemed that it's quite easy and electronically easy when we notice a mistake under the US declaration, of course, as long as we are supported by your expertise and from professional, but it's very well received, especially if it's a standard mistake. That at the same time, there is quite, regarding the reform, a wish to be, I would say, quite light from the tax proceedings. Not such a big fight against tax fraud right now, compared to many years. And the last topic is, of course, there is a significant project of bills regarding maybe crypto, real estate. This very interesting non-residents. Am I right when I say maybe what my feeling is like US seems to be complicated as ever because 50 states, huge country, lot of knowledge, but it's quite resilient in the tax approach and the tax proceedings approach, and not so much litigation except in your state, I would say.
There you go. You said it beautifully. I think that was very well said. I will conclude with one thought here, which is, honestly, I don't really care which way we go with our tax rules and law, but as a tax practitioner, I would just like it to be flat for a while, because we've had so much change occur in the United States. It's so difficult to, when a client comes in and says, I'd like to plan. And I'm like, sure, we can plan for 3 months and then we'll see what happens. So I'm okay with just letting sleeping dogs sleep for maybe a year or two. So if nothing happens for a year or two, that would actually please me. I don't care if it's bad law, we can make it work. We'll find our way through it. So that's my concluding thought there.
Okay, happy to plan for the next 3 months. I love that. Thank you so much, Mishkin. It was really a great pleasure. Have a very good day.
All right, you too, Delphine.
You've been tuning into Delphine Parigi's podcast, Tax Defense Connect by DPZ. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, and Spotify. Thank you for your positive reviews, comments, questions, and for sharing this show with others.